Okay, hopefully that's bright enough. What's going on, everybody? Welcome back to the channel. It's Millennial Trades. Um, I drank a bottle of wine. I'm feeling talkative. There's some things that I want to get off my chest, and some things that I want to tap into, some frustrations I want to tap into that I think some people will understand. I'm not going to talk really. This isn't like a personal video. This is more about my investing, my trading, my strategy, what's going on in this head of mine right now because I cannot stop thinking about this stuff. And there's a lot of different ideas out there. I have my own ideas. And so, yeah, we're going to talk about it. There was a comment on my vegan stock video where somebody basically said they were down, I think like 30% on Beyond Meat. My top three vegan stocks, that short that I did, Beyond Meat, Tattooed Chef, and Oatly. I've never been down that much on Beyond Meat. I was buying Beyond Meat in one of my family members' accounts, and we're down on that position fairly, in a substantial way. I don't know if it's 30%, but I have been down on my Oatly position about 29 to 31%. I think today it's still down. Like, all the small caps today got absolutely wrecked, SoFi included, but all these vegan small caps that I own. And so my Oatly position has not been going well. So I definitely relate to that where, you're holding this and you're basically holding the bag for 30%. I don't think I've had any positions that have gone down more than 30% since I've been buying steadily in June, maybe like May, June. And I made some trades here and there. Like actually recently I had one share of FedEx that I sold so I could buy more Black & Decker, believe it or not. And I bought Ally Bank and I think a share of Intel today. So I basically traded my one share of FedEx to buy like three other companies that I'm more heavily invested in just because the stock price is, more affordable. And so, since I've been growing this account, I have, I don't think I've had a position that's gone past 30% down. And most of these positions that are down that much are in the more growth end of my portfolio, not the dividend stocks. There was one dividend stock, MPW, Medical Properties Trust. I started buying that like very early on, and that just keeps going lower and lower. I think it hit like something like $10 or something, and I'm still buying it near $10.50, $11, whatever. But I think my average right now is 12 or 13. And I have a few shares, probably like over 20 of those now. So I am still adding to these positions, but I'm much more involved in the short-term aspect of it because it's like you could buy these stocks and just hold them, like the dividend stocks or the stocks you truly believe in, and you can just hold them. But it's like there's not much else to really do other than add to the position. You got to follow the price and follow the price action, and a little bit of the technical analysis and maybe the earnings reports and stuff like that. Try to follow the sentiment, but other than that, there's not much to do. You basically just watch. And a lot of the times I'm just watching this shit, 30% down for like with Oatly, for example, for days and weeks on end. So it gets kind of boring. So there's just something innate in my personality that has to be a little bit more active in these markets. And so I like day trading options, swing trading options as well. Swing trading some of my stock shares. For instance, I bought like, this isn't like my biggest trade, but percentage wise, it was a good trade. I bought Snapchat down at like $7 or wherever the bottom was. And over the course of like a week, maybe a little over a week, I was up 30% on those shares. And it was only 4 shares, right? So, 30% amounted to, I think, about $11, almost $11. So not that much in perspective of like the dollar, but percentage wise, I mean, 31%. I think I sold at 31%. And I think I made the right decision because it's starting to come down. It came down today. The entire market's coming down. So I think if I wanted to buy Snapchat again, I could probably buy back in at a later point. It was kind of like with SoFi, right? We were up 18% yesterday. All right. Like two market days ago. and it came right back down. But I said in one of my shorts, I was like, I'm going to be waiting for SoFi's pullback, whether it happens today or in the next couple of days, next week. I'm waiting for SoFi to dip back below $6. And that's exactly what it did. I had no idea that it was going to do that today or yesterday, but we were up 18% in pre-market. Market opens and SoFi loses all of its gains that day. And then today it's down like another 10%. I think I said 5% earlier, but that was like early in the day when I had just got done trading. So, it is devastating watching this market, watching my investments just bleed money. It is really, really hard, but at the same time, it's kind of boring as well, because this is what I signed up for. I'm going to hold long-term stock, even if the valuation goes down 50%, it's like I got to be prepared for that. If I believe in the stock and I'm going to buy it at this price for this dividend yield, especially if you're buying dividend stocks, you just got to deal with that. Warren Buffett said in this one video, if you buy a house, let's say you buy a house and the next day the quote is lower than the price you paid for. Well, it doesn't mean you sell your house just because the quote the next day is lower than the quote from the day before or what you paid. And so that's definitely, I think, a good thing to keep in mind, a good perspective to have with these long-term investments. But I am interested in growth. I'm really interested in fintech. You guys know this. I love the fintech space, whether that's SoFi, Square, PayPal, Ally Bank, even the more traditional banks, Bank of America, Truist Financial. There's a lot of names out there that I'm extremely interested in, that I'm extremely involved in, that if I'm not holding long-term positions in, I might have held them recently. And Square, I was debating. I've built up like 7 shares of Square. This used to be a $300 stock, and I've been buying it like under 60. And I'm now down on the position, I believe, because Square just had a monster day down, and that was the stock I was day trading today. I'm frustrated because I got kind of caught up in the early morning chop, and Square was like trying to rally, was doing this weird thing where, it looked good. It looked good for a rally, but you see the dollar index going up, you see the bond yield struggling, there's all this economic data, the economic events, the FOMC, the Fed, rate hikes. And so, I was down on that position this morning, and then as soon as I saw a little bit of green after that first pullback, I sold out, right? And I sold way too soon. Would have made way much more money. This would have been a very profitable day for me had I just, had the balls to fucking hold these contracts. But, I'm trying to use money management, and a lot of the times when I get caught up in chop and everything, I don't know if this is like cope or if this is actually something that really works for me, but I always tell myself I need to walk away at about 11, noon at the very latest, because when I start trading past that, it usually doesn't go well for me. And that is true, right? In my experience, that's been true. But at the same time, had I had a little bit more patience, because I think I sold at like 11:30, had I just had like another half an hour's worth of patience, because remember, I got in at 9:31 on these Square put contracts, and you can see this on my short. I'm sharing all my trades via shorts, and then I can use these long videos to kind of talk about them. If I had just held out another half an hour, today would have been a very profitable day. And even though I'm green on the day, green on the week, it's still frustrating, and it still feels like a loss. Like when you don't, at least for me, all right, in my trading experience, when I don't have these huge, wins, 8% gains in my account or 10% gains in my account, 5% gains in my account, I don't know, I kind of feel like I've lost, which is not true. But there's something that's definitely pushing me to pursue this and to continue trying, because, it's kind of like, it feels like now or never. And that's probably not the case. It could take me another year, maybe longer, to really get the hang of this and really become in a long-term way profitable. But, I just feel like it's now or never. Like I really have to focus on this. And I'm trying to, but trying to develop my own process as a non-professional, as somebody that's kind of outside of the finance industry and never went to business school and had to learn a lot of this the past couple of years. I'm slowly developing my own process, at least, at least a process that's kind of seems to be working, and it doesn't include just one trade. And I think that's really where I was making the mistake before. It was like, I just wanted to trade one certain way, or I'd be like, no, I can't trade. I got a long-term invest. So I just focus on long-term investing. It's got to be like all of it. It's got to be the day trades. It's got to be the swing trades. You got to be able to take profits, especially on companies that are not even paying you, right? Especially on non-dividend companies, you got to be able to take profits. And that's what I told myself. Like, I think it was Rick Rule that talks about this. When you have these, big gains, like a 30% gain on your money, I don't care if it's $10, $100, $1,000, or $100,000. If you make 30% on that in a week, you're crazy not to take it. You're crazy not to take it. And unless this is something that you're really like a long-term position you really want to build up. But like with Snapchat, I had another recent trade like this on Shopify where I had 4 shares and they were up like 25%. I cut it because it was like, 4 shares, you're up 25%. It's scalable. So just imagine, the more you're putting into these trades. But at the same time, one of the really difficult parts for me is like cutting losses, especially when it comes to like the long-term positions. I don't really, even though my positions have not gone down 30% or more than 30%, it's not like I've had a position that's gone down to 40% or 50%. But even if that did happen, especially on my dividend plays, I'd have to just consider holding that bag and adding to it. And with the shorter term options trading, I think it's taken me a while to get there, but I'm kind of able to recognize when the trade's not working or when I'm caught in the chop, and just, it's getting easier because I realize the market's open tomorrow. And even if I'm down $100 or if I'm down $50 or if I'm only up $20, cutting that trade in those market conditions that just long-term have not worked for me, it's a much better long-term habit that I think is going to help me survive. So yeah, being down like that, 30% down on stuff, definitely relatable. And I think a lot of us are there. I mean, I watch a lot of the SoFi videos, and there's people that are holding SoFi at $15, $12, $10, and I'm complaining about my average, which I think is like right around $6 right now. And I'm excited for SoFi long term, but it's really discouraging to see what happened yesterday where we were up so big, we gapped up, and it's like we just got way too ahead of ourselves. Especially in these, bear market conditions, when you see these stocks rally like that in the pre-market, oh man, and they gap up 18%. Like, what did I expect other than a huge pullback? And I said that in my short that, we were probably going to get a pullback at some point in time. I didn't think it would happen that, dramatically, but the Fed, I don't think the Fed is going to be dovish anytime soon. That's just my opinion on it, but maybe there were some dovish comments, supposedly. I didn't watch the whole thing, but, they came out with their 75 basis point rate hikes. Yes, Canada, a couple of weeks ago, came out with 50 basis points instead of 75 basis points. You have the whole back and forth in England. So there is maybe a trend of kind of easing up on the super aggressive rate hikes, but I don't think, why should America follow that? The other thing to consider that is that, if the Fed doesn't get this right and whatever, we lose that monetary power, we lose that monetary influence, if we lose the world's reserve currency status, which is what so many, silver stackers and gold bugs and anti-Fed channels are talking about out there, we would lose our way of life. And for some of these people, they live outside of the United States, so it actually would benefit them. And you have to think about this too. When there's, guys that are living outside of the United States talking about in the Fed, well, it helps them if the Fed doesn't have that, if the dollar doesn't have the global reserve currency status. But I think the dollar is going to be extremely powerful in our lifetimes. I think it's going to be the only real legitimate world reserve currency, it's probably as long as most of us are alive. And it's exciting to be living in that country that has the world's reserve currency. It benefits all of us. It benefits us as Americans, and I don't think we should forget about that. Yes, we should be hedging against a potential, the potentiality for some major economic system collapse, but as far as like stacking the bullion and the hard assets and stuff, that's more just to like make myself feel better. I just like holding it. I like having it. I like knowing it's there. I like knowing it's around my neck. I got to get some gold around my neck, but one thing at a time. People sometimes ask me, is this white gold? It's not white gold. It's sterling silver. But you can probably tell by the way it sounds and the way it shines. Trying to wear more of my pieces because I've been only wearing the cross. But this is basically my silver stack around my neck that I wear every single day. So yeah, I'm a little frustrated, but I'm really excited. I'm building up my cash reserves simply by trading. I'm trying to hold on to some of these positions. Yeah, I'm trimming and hedging and adding and whatever, but long term, I think we're going to get through this. I think 5 years from now, this bear market is going to be not that we're going to reach the highs of 2020. I'm not saying that, but I think this bear market is going to kind of, in a few years, it will be behind us. Could last into 2023. I'm fully psychologically prepared for that. I want to be trading through it the entire way. So for me, it doesn't really matter if my long-term investments don't work out right now. I'm going to constantly be trading the market and trying to, I want to be, my ultimate goal is to withdraw from the market and to not deposit into the market. That's my ultimate goal. And I think as a trader, as an investor, that would be the ultimate form of success. You're withdrawing from the market. You're not depositing into the market. So I will leave it there. Thanks for listening to my late night wine-induced market rants, and I will see you guys on the next video. Millennial Trades out.